right, yes, perfect. So first of all, I want to go over context again. And not fully in depth as in the previous video, but just to give one or two more examples to fully recap it before we move on to candle signs. Because the way this story is built in the mentorship is as well. If we want to understand candle signs, then we need to first understand context. If we want to understand context, then we need to first understand order flow. If we want to understand order flow, then we first need to understand fair value gaps. If we want to understand fair value gaps, then we first need to understand PD rates. Because for the PD rates, every PD rate to be valid, we needed fair value gaps. All the order flow to be valid, we needed fair value gaps again. For context, we needed order flow. For candle signs, we need first to incorporate context for candle signs to actually make sense. So that is how the story adds onto each other. So if that's currently a little bit overwhelming, that is perfectly fine, as long as you understand the very basics of context that we're working with, as long as you understand the very basics of order flow that you're working with. Again, this first month is just to get you introduced to everything. I'm not expecting you to be $1 million funded after this first month, and that's also not the expectations you should put on yourself. That's very unrealistic. I'm expecting you to give it 6 months as a minimum though, and then afterwards we'll see where we're at, because then you will have a great understanding. So again, that is again a reminder as well of the house rules that give it time. No worries, it will come. No worries at all. So right here, we are on the daily time frame on Euro US dollar. And to build onto the context ID again, then we first start off with fair value gaps. So fair value gaps are telling us a story in itself. Fair value gaps tell us the intention, right? They tell us the intention of where price potentially wants to move towards. Then the first fair value gap lower that we see is right there. At that moment in time, there's nothing really much going on. We don't really have any confirmed order flow or whatsoever. So that's perfectly fine. Then at that moment, we come into that fair value gap and we have a new fair value gap lower off of that fair value gap. That means that that bearish order flow on the daily time frame, so I'm only currently looking at daily time frame right there, is confirmed bearish. All right, interesting. Now, let's say all the other time frames right there are agreeing with this. Perfectly fine. We can continue bearish overall. So right here, this right now is your lot, your last line of defense. In other words, that is ideally your protected high in that moment. Now, market structure then comes in. It's also something we're going to touch on later on. Now, right here on order flow basis, this is also your protected high that is sitting right there. It can get swept because there's a reason it is the last line of defense. How do we know it's getting swept right there? That is where candle signs comes in. So all we did right there is, again, we are moving lower from what? Premium rate right there, and then we just followed fair value gap. So here it took a while before we created new fair value gaps. I remember this time was not the prettiest. Then we had this premium rate right there, which we continued lower from. Then eventually we started respecting the fair value gaps again, where we continued lower from. And then we continue lower from those. And again, those boundaries, those contexts right there, the premium rates, they also lead to our target, which is just the first discount rate that we encounter. The first discount rate that we encounter. The first discount rate that we encounter, which is this swing low right there. That creates our context. So this whole area right there is our context, where at that moment in time, we have a protected high because we're coming into a premium rate. So we are expecting a protected high to be created. And then we are targeting also a low. So we are targeting a weak low, protected high and a weak low right there if you're having bearish context. That is also where market structure eventually will come into play, which will make it a lot more sense as well. But in order for us to do that, first need to understand the basics before we can get into that execution phase as well. So right there, that creates, overall what we've done right here, creates our usual context. This usual context right there is probably the easiest to understand because it's just premium rate to discount rate, premium rate to discount rate. And it's the same for the opposite, of course, where we have discount rate to a premium rate. Now, the next part is unusual context, which is where order flow does the exact opposite of what we are expecting it to do, which creates unusual context. So unusual context is just the opposite of what you are expecting usual context to do. What does that mean? Well, if we take a look right here, then we have this daily value gap lower right there. That daily value gap, very simply said, based on daily order flow, this high should ideally get respected right there. So once we continue lower, then this fair value gap could be where we continue lower from. At that moment in time, we are not getting a rejection lower. So there are early signs, and the early signs on how you can recognize that is something we'll get into. There are early signs that we are not respecting that daily value gap. We are likely not continuing lower, which means the target is then inversed. So what does that mean? On order flow, usual context. Usually you have a premium rate right there, which makes this the protected high at that moment. Whichever high gets created right there is your new protected high. So this at that moment was this likely the protected high to push price lower, if it wanted to push lower, towards this weak low. There's the same context on what we had right here. The protected high right there, and then your weak low sitting right there. That is the same exact premise. So right there, once you notice that we are not respecting our bearish order flow, our usual context, what then happens? Then unusual context is developing, most likely, where the protected highs are now not protected anymore. They are the weak highs. So the protected highs become the weak highs, and the weak low becomes the protected low. So it switches around. It just does the exact opposite of what we expected it to do. So right there, eventually then we target what was the protected highs are now becoming the weak highs right there. And then your unusual context turns into either a lower time frame or the same usual context again. Because this right now is just daily fair value gap right there, to then continue higher off of that to target previous day high, eventually that target right there, which creates again your usual context. And again, what is that context? That context is moving from premium rate to discount rate, moving from discount rate to premium rate, from the PD rates to the PD rates, what we talked about in the first video as well, where the target for that context, so the target context, which is step 4 of the foundational levels, is 9 out of 10 times for what we're starting off with is either a previous X high, previous X low, or it's a swing high slash swing low. That is all you need to stick to right now. And if you want to target further than that, then we're going to incorporate the other PD rates, but that is not relevant currently in this moment. So this unusual context creates unusual context. That unusual context create again usual context right there. So to give you more examples of this and to give it full clarity, hopefully, that is what I'm trying to achieve here, is here we can see the same thing, where we have this daily fair value gap lower right there. We are not respecting it right there. So at that moment in time, do we have a daily fair value gap to work with like we have right there? As in, do we have something to capitalize on the idea of now targeting this, what was the protected high, now the weak high right there, this the protected low right now, which was the weak low right there, to switch it around. So do we have something, that narrative again, that boundary to capitalize on the move higher right here? Well, currently not really. We have this previous day low sitting right there. But overall, if we have some fair value gaps higher to work with, that gives a clearer story, right? Then the unusual context, or what we can see is we have usual context leads to unusual context. Now we want to have usual context again, where we can look to target higher. So if you have something on the 4 hour, for example, 4 hour fair value gaps right there, or even on the 1 hour right there, eventually to continue higher, 1 hour fair value gaps right there after sweeping that previous day low. And then we continue higher off of that. Fair value gaps getting respected to target higher right there. So what I just did here is I'm just looking at fair value gaps higher to find our usual context. If that isn't on the daily fair value gap, on the daily time frame, I go down one time frame. On the 4 hour, that's the general rule of thumb. If you have unusual context on the daily time frame, you go down one time frame to find context. But that's a general rule of thumb. And the reason being for that is because if you don't have 4 alpha value gaps higher right here, which you can easily trade off right there, then you go down even one time frame more. Again, is that relevant for you to currently understand? Yes, the basics are relevant for you to understand at that moment in time. Do you fully need to understand that? No, because that is where the execution already comes in. So that is something, this is something at the core of the mentorship, as in, if you understand context, you know exactly where to trade. You know how big of an achievement that is. If you know exactly where to trade and when to trade, that is what people don't understand in the trading industry. As in, barely anybody knows where they should trade, what they should trade. Nobody knows their boundary to go into the low time frame. Nobody knows their target all of the time. So if you understand this, then all the hard work is already done. It's over. It's over with. You already understand full trading. So if you can understand this, then you understand everything. So I do not expect you to fully understand this right now. So don't worry. There's no need to stress at all. It's completely fine right now. So right here, again, what I always mention is as well, and this is what previous enrollment members also know, the hard work is always done on the higher time frame, on the analyst phase. So the analyst phase is also the hardest phase to fully understand, to fully grasp, in that sense, to move on to execution. Because execution is very simply, it's an entry pattern, a mechanical entry pattern you follow, and that's all there is to it. The hard work is done in the analyst phase. So let's do the hard work right now, and it will pay off 100%. So again, this is where candle science now comes in, because that unusual context, to fully be able to understand it, is again where candle science comes in. But not only your unusual context, because it also is very handy for your usual context. Candle science just simply refers to studying every single candle that we are trading. Because all we are doing as traders, we are always trading one singular candle. That can be a monthly candle, a weekly candle, a daily candle. Because inside a monthly candle, there are 30 daily candles, right? Inside a weekly candle, there are 7 daily candles. Inside a daily candle, there are 24 1-hour candles. We are just trying to trade whatever the next candle is trying to do. So if we know what the next monthly candle wants to do, then we have 30 days. We have 24 hours in one of those days where we can capitalize on that ID. Now, of course, the market closes in the weekend, so it's not totally accurate, but I think you understand what I'm trying to tell you here. That if we understand where a monthly candle is going, one singular monthly candle, then we can understand where that entire month will go. We can understand, and we have a lot of 1-minute candles to capitalize on that ID. That is exactly what we are trying to achieve right here with candle science. And then candle science is where if you read one single candle, you can know where the next candle is likely going to expand towards. And that is what we're trying to achieve right here. So first of all, we need to understand again what I mentioned. We are always trying to trade one singular candle. So the direction of the next weekly candle, the direction of the next monthly candle, the direction of the next daily candle, that is what we're trying to achieve. That is what we're trying to trade. We don't need to know all these daily candles right here. And because a lot of people, the way they approach trading is something along the lines of this, is where they have a very zoomed out version of whatever will happen. All we need to do, and to make it ourselves very easy, is just understanding where the next candle will gravitate towards. Where will the next candle expand towards? Is it higher or lower? Will the next candle be higher, a bullish candle, or lower, a bearish candle? That's all we need to know. And if we understand that on a monthly basis, then we have so incredibly much price action to work with, which is insane. And then we can capitalize on that ID. So right here, we first need to understand disrespect and respect. For both of these rules, I am going to give you a general rule of thumb. That again means that it's the same what I need you to understand for probabilities, that probabilities is not binary. General rule of thumbs are not binary. It's not this thing happens, so the next thing needs to happen. No, that is also where later on, if we stack up arguments, we stack up confluences, and we stack up the other ideas that we know throughout this mentorship, the concept that we get to know, that is where the full understanding comes in. As a general rule of thumb, when we are respecting a PD array, so this is the form of an order block, a mitigation block, a breaker block, a previous day low, previous day high, swing low, swing high, and a fair value gap. All the PD arrays we mentioned in the first video. In order to see if we are respecting those, we need to understand how the candle is closing inside or outside that PD array. So what do I mean by that? Why did I mention at that moment in time that this right here, this fair value gap is getting disrespected? That is because without even going into the lower time frame right there, so without going into the time frames below the daily time frame, we could understand that as a general rule of thumb that this candle right there was closing inside that daily fair value gap and closing above the order block low right there, which told me at that moment in time, with the overall context which we're going to add on to, we just need to understand general rule of thumb here, which told me at that time right there that that was disrespecting the daily fair value gap, disrespecting the premium array. So when it's doing that, what can it do? It can reach for the next premium array, which is then again the previous day high right there, and then eventually that high. Because at that moment, the next candle, did it respect the previous day high? No. Why again? It's closing above the premium array. It's closing above the premium array right there, which tells us, all right, we are not respecting that. So we are reaching for a higher premium array. Because remember, what we also touched on in the context video, in the previous video, is that all those premium arrays, so the fair value gap low right there, the order block low, the previous day high right there, they act as potential boundaries where you can potentially see an entry pattern, which is what we're going to touch on in the execution week next week. So all those levels act as boundaries. So if you don't get a confirmation, your entry pattern, that we want to continue low right there, then what will we do? We will continue higher right there. So right there, at that moment, we are closing above those candles again. All right, or above the premium raise. All right, that is very interesting. That tells us right now that we are disrespecting them, which means that if we now start to do what? Respect discount arrays. What does that tell us? That tells us that we are overall bullish, respecting bullish order flow. So right here, the respect of that bullish daily fair value gap, as a general rule of thumb again, is that right there, we are not closing inside of it, we are closing above it right there. So for your discount arrays, you always ideally, in an ideal world, you want to see a close above your discount arrays, not in the discount array and not below it, above the discount array. So a wick, that means that we are wicking right there. For your premium arrays is the exact opposite, of course, where you always ideally want to see a close below the premium array, not in it and not above it. So this is where we are disrespecting premium arrays and respecting what? Respecting discount arrays right there. So to give you a few more examples as well, is that if we want to continue lower, we of course, this swing high right there is also a premium array. So there, to know if we are likely sweeping something, then very easily said is if we are not closing above that premium array, if we're not closing above that swing high, then that tells us the first step that we might be sweeping that high and that we are not actually closing above it, which tells us that we are not disrespecting the high. So respecting that high is again not closing above it, where we then have this bullish daily fair value gap right there. And what can we see on this candle that is sitting right there? We can see that we have a close inside that daily fair value gap, a close below or inside a discount array. That tells us again, all right, that means we are likely disrespecting that bullish daily fair value gap right there. So hopefully you can clearly see the respect and the disrespect as a general rule of thumb. To add on to that general rule of thumb, what you can see with that is that if we are respecting a premium array, as in we are respecting any PD array, then the next candle is quite predictable, because the next candle after we are sweeping that high, so we are not closing above that high, then the next candle is quite predictable. Why is that? Because the next candle is likely going to be a bearish candle right there, because we are respecting that premium array, and that premium array will likely push price lower. So why did I not mark out this high? What are we doing with that high? That high right there is doing what? That high is currently telling us we are closing above that high. So we are likely seeking a higher premium array. Then that premium array right there is telling us we are respecting that premium array. So we are likely seeking a lower discount array. And that is, in that moment in time, creates what? Creates new context. Because what have we just done? We've just built the whole story of trading the next few candles. We could have traded every candle individually right there, because we understood just basics, general rule of thumb right here on what the next candles wanted to do right there. Because at this moment in time, and to fully be able to understand this, I'm going to hammer it into your head right here, is that we have this high, that swing high. Are we respecting that swing high, or do we want to continue higher to seek for another premium array right there? All right, well, we are currently not respecting it because we are not closing, or we are closing above it right there. All right, perfect. So then the next candle, the next daily candle, we can potentially seek again for our usual context on a potentially 4-hour time frame, 1-hour time frame, to find that usual context what we have, to then look for trades into that next premium array. So this is just very simply how we can capitalize on this again, is things I am mentioning, and it's good to already ingrain them into your mind. Do you need to fully understand how to capitalize on that idea right now? No, I just need you to understand the very basics right here. So if you understand a little bit more than the current basics, and you already understand, hey, we can capitalize on that idea, that is awesome. That is absolutely perfect. You already understand so much. I just need you to understand the very basics right here. We're only going over the very basics right here, right now. And I'm mentioning throughout that as well some advanced stuff to already get you ready for the next step. So if you only understand the basics, beautiful. So right here, the general rule of thumb is, again, on the first candle closing above the premium array. So we are likely seeking for a next premium array. Then right there, we are not closing above that premium array. All right, that is suspicious. Because right now we can say, all right, what are we creating below that? Well, we have this discount array in the form of that daily fair value gap. Hey, what have we just done? Through candle science, through context, and with the help of candle science, we have just created now context. Because now we know that this high is likely protected. Because that high is respecting that premium array to the left right there, that swing high. So this high is likely the protected high, which then again, we are moved from premium array to now discount array, which is the previous day low, which is also that daily fair value gap that is sitting lower right there. So overall, right here, what you could have done is, if you go into the 4-hour, look for anything to capitalize on that move lower. So this could be your overall unusual context right there, and as well your usual context when we then continue lower overall. So right here, you could have created potentially usual context on the lower time frame, where we have this 1-hour fair value gap right there. All right, perfect. We have this one. We can continue lower off that. We have usual context in the form of this fair value gap right there. Can continue lower off of that. So we have two potential opportunities right there to continue lower towards that daily fair value gap right there. So the unusual context created, again, usual context right there. And we got help off of candle science, because candle science told us right now what I didn't mention in the previous video because we were not going into it yet, candle signs told us what the disrespect actually means and the respect actually means based on what we can expect for the next actual candle to expand towards, expand lower, expand higher. What can we expect for the next candle to actually do, to actually create right there? So then after we are closing in this daily fair value gap lower, do we think we are now going to head higher off of that daily fair value gap? No, because we are disrespecting it. So what is the next discount rate that we can reach for? Well, the first one is the previous day low right there. It's likely going to be reached very fast. The next one is this swing low, and the next one is that swing low as well. So that again creates that same context where all you're doing at that moment in time is you're looking for usual context. On the 4 hour, do we have something that could create usual context? Yes, we have this breaker sitting right there with this fair value gap right there. So that creates our usual context in the form of premium array to this first swing low, which is the first discount array, and eventually the higher time frame targets we had on the daily time frame to continue lower towards those right there. So that is the same exact thing that is happening over and over and over and over. So that is also what we are going to touch on in this video, and that we've already, of course, been touching on right here. But we are going to go fully hammered into your head, and that is my goal right here as well. So right now, at this moment in time, we need to understand the following. That we need to understand again that it was a general rule of thumb, right? And what I mean by that is because there are certain times when we seem to disrespect something and we seem to respect the other thing, that it does not follow through. Again, overall, the thing we are working with is probability. So will it work 100% of the time? Definitely not. But we need to understand that the general rule of thumb, there are exceptions to that general rule of thumb. That's why it's a general rule of thumb. So the first exception that we have, and it's basically the only exception that we have, is if we look at Euro GBP and we remove everything here, then I just want you to pay attention right here that we have this order flow higher right there. So if we look at this order flow higher right there, we have this protected low potentially as a last line of defense. We have the order block right there. Then we also have this fair value gap sitting right there. So if we want to continue higher, we can potentially look to continue higher overall off of this weekly fair value gap that is sitting right there. So we come into that weekly fair value gap, and it seems like at the close of that weekly fair value gap that we are doing what? We are disrespecting that, and we are respecting this high. So at first thought right there is that we might actually continue lower. At second thought, diving into it a little bit deeper, is all right, we are on candle signs using the general rule of thumb. We are disrespecting that daily fair value gap. And I completely agree with you if you were to mention that to me right there at that moment in time. But if we zoom into the daily time frame, and the reason I zoom into the daily time frame is to get an indication where and when we closed inside that weekly fair value gap right there. Because if we take a look at this, then at the close of that weekly fair value gap, the weekly fair value gap there is perfectly closed. So the market is closed right there. And on the daily time frame, we can see that we are coming into that weekly fair value gap late during that week. So the boundary of this weekly fair value gap is now gone. As in, the boundary is gone. It's not, that weekly value gap is not something you want to continue higher off of anymore. Yes, the order flow story, etc. is still there. Overall, it's not where you are now looking for your entry pattern, because that boundary is overall gone. But since we have come into that weekly value gap late during the weekly candles phases. So what I mean by that is just during that weekly candle, of course, it's just a weekly candle. So it will form from Monday, Tuesday, Wednesday, Thursday, Friday. So if we come into that weekly fair value gap on a Thursday, on a Friday, then that weekly fair value gap right there is being traded into late during the week, in the later half of that week right there, which means that it might not have the energy for that remainder of the week to actually continue higher already. So that leads me to, all right, then what can we expect? a low close right there means that we can expect a previous day low, a previous X low, sorry, a previous week low sweep to then continue higher right there. So that is what we are seeing next week, where we have a previous week low sweep right there to then continue higher overall. And that's the same exact story where if we look at this close right there, we have this Friday close. So that closes inside the weekly value gap quite low. And relatively seen, as in the body to the wick, relatively seen, it's a very small wick and a very big body. So it's a very low close, just purely based seen by the candle itself. Then we can tell right there that the odds of sweeping the previous day low based on candle signs, just because it's a low close, are increased right there. Because it's a very low close, where if the next candle on this candle right there, we can see we also have a previous day low. That previous day low, what does it have? A long wick right there. A long wick with, relatively seen, an okay body. Quite a big body at that moment in time. So at that moment in time, would you now expect a previous day low sweep to then continue higher? No. Just very simply said, because it just doesn't have the energy to come all the way back down there to then continue higher. Where at the first candle, so at this moment in time, it did have the energy. Why? Because it's very close to it. That's all there is to it right there. So that adds on to the idea where if we come into that weekly value gap later in the day, later in the week, sorry, then right there, we can continue higher still off that previous week low. So at that moment, it's an exception to the general rule of thumb, where if we are closing inside the discount rate, it's disrespected. Because here, it would not be disrespected just yet. For us to call this disrespected, it would need to take that next boundary, which is the previous X low, the previous week's low right there. So let me go over another example right here with GBP Canadian dollar. And on GBP Canadian dollar, we can see that the daily time frame again is what we've looked at earlier as well in this mentorship in the previous videos, is that this can continue higher off of this daily value gap. So overall, again, we have order flow right there continuing higher. We have, let's break this down fully actually. We have this fair value gap right there on the daily time frame. That daily value gap is getting respected. Why? Again, because it is closing above it right there. Then the next candle and the next candle is quite easily tradable, right? Because all you need to do is just look for trades to target that high. Again, that all you need to do is an over exaggeration. That is again where we are, where the execution phase is coming into play as well. So right there, the next candles are predictable, as in because we are respecting that. The next candle is predictable. After that, are we respecting this high? No, we are not respecting that high because we are closing above it right there, indicating that we might just want to continue higher. So right there, we are creating a new discount array in the form of what? We are creating a new discount array in the form of that daily value gap, which before we dive into that discount array in the form of the daily value gap, how is that created? Right there, we are doing what? We are having a long wick at the top right there. So this is a long wick right there, relatively seen to the body of that candle, which indicates to me that the next candle has a very easy path right there to trade into the daily fair value gap right there. Because this is already indicating right there with that wick, the long wick, that's respecting something. And all we need to understand right there is that the next candle can easily trade into the daily value gap because it's a small path. There's not a lot of room right there to then eventually still continue higher off that moment. So that is quite interesting. All right, if we know that, then we know once we come into the daily value gap, overall, we are looking at potential bullish price action just purely by reading the candles right here. We're reading the candles. And at this moment in time, on that Wednesday, look at what we are doing here. This is a complete disrespect. At least that's what you would think at the first moment right there, right? You would think that is a complete disrespect. We are definitely continuing lower right there. We are disrespecting the daily value gap, disrespecting the order block right there, the open of the order block. Wow, this is a complete disrespect. But if you didn't pay attention to the 1 hour time frame right there, and it told you that we came into that daily fair value gap at the end of New York session and the beginning of London close right there, which is again times we're all going to go into, but we came into that daily fair value gap late during the candles phase. So late during that candle being created, we came into that candle very late. This is when we would use the next boundary of the previous day low that is sitting right there to continue higher off of that. So this is exactly when you would expect now a previous day low sweep, a previous X low sweep, because this is again happens with every single candle because the market is fractal right there, to then continue higher off of that right there eventually. So then we are still respecting it, but at first glance, it might seem like we are disrespecting it right there. That is very important to understand. So if we then head back to Euro US dollar, then we can see overall that if we fully break down this story and we start on the monthly time frame, that in the monthly time frame, we have this monthly fair value gap right there. And we also have this order block right there. Now, at that moment in time, it's very, very crucial to understand the full story again. So let's fully break this down again, just purely based on candle signs. We have this swing high, which is a pre-Murray. What are we doing during that particular month, during this month right there? And let me replay it just so you can clearly see which candles I'm using. What are we doing right there? We are respecting that pre-Murray. So as a general rule of thumb, what can we do right now? We can target the next discount array, which creates what? Context, because this is now our protected high and this is our target right there. It's our weak low that we want to target. So this next candle, the next monthly candle or the next 2 monthly candles are extremely clear because we just have a clear indication of where price wants to trade towards. Once we reach that, perfect. We had such great 2 months right there because the bias was so super easy. It was super easily tradable. Just purely using candle signs right there. Of course, with context, with order flow, with fair value gaps, everything right there that we already need to understand before this. So at that moment in time, we are creating a potential fair value gap. Now, we are creating a fair value gap right there on this month. Yes, perfect. So we are creating a fair value gap right there. How did we know at that moment in time that it might want to trade into the fair value gap and not just continue lower? Look at this candle, at this particular candle. So I'm aiming at this candle right there. Oh, at this candle right there. Look at how it closed. Relatively seen, a very small body, long wick to the downside right there. So as a general rule of thumb, if we want to trade into a fair value gap on any given time frame, then for us to trade into that fair value gap, ideally what you want to see is not closing below the previous candle's low. That is the same for previous candle high, not closing above it right there. That's a general rule of thumb to make it a little bit easier to understand when I would expect a move back into a fair value gap that is being created. The same thing we are seeing right here, where we have this fair value gap. At that moment in time, I would not expect a move back into that fair value gap because that third candle of that fair value gap being created did what? Closed above the expansion phase candle. So closed above the second candle right there of that fair value gap. It's the same thing that we're seeing right here, where we again have the 1, 2, 3. So the expansion phase candle should ideally not be closed below if we want to trade back into the fair value gap right there. So there's a general rule of thumb. Of course, there are also exceptions to that rule, which we're going to get into as well. Then right here, we have the monthly fair value gap sitting right there. All right, that monthly fair value gap. Are we going to wait an entire month to potentially see if this wants to continue lower or continue higher? Because right now we can potentially very clearly tell, well, this wants to continue higher with the next premium array as target, that right there. But do we need to wait the full month right there based on candle signs to know where the next month is going to trade towards? No. Because this is where candle signs, all that we have been doing is we have been reading the fair value gaps without reading the fair value gaps right here. So right here, this premium array that got respected, what is this wick on the lower time frame? That's a sharp turn. Now, fully understanding a sharp turn is what we're going to get into later on as well. But the fair value gaps right there already told us, just by looking at that wick, that we are sweeping that high. The fair value gaps here are telling us, just by looking at this disrespect on the monthly candle right there, that we are actually disrespecting that. And the fair value gaps told us without even looking at the fair value gaps. So the fair value gaps telling us that is what we're going to go over right now. Because if we go into the daily time frame, and on the daily time frame, we can see that this high in the form of that monthly premium array right there is getting swept. Why? Because we have bullish fair value gaps going higher. Those bullish fair value gaps are getting disrespected by bearish fair value gaps right there, creating a sharp turn overall, creating bearish order flow of this premium array right there, which is just this whole area is a wick on the higher time frame. So that's the same premise here, where right here we are coming into that monthly fair value gap. How can we know that it's respecting this monthly fair value gap right there and wants to continue lower? Well, we can either wait for an entire monthly candle to be created, or we can just use the time frames below that, the fair value gaps below that monthly fair value gap right there, to dive into the daily, dive into the weekly, dive into the 4 hour to see what it's telling us. So at this moment in time, we're creating an extremely small fair value gap right there, which I don't like small fair value gaps, but again, that's a whole different topic, which we're going to get into as well. But right here, we can continue lower than off of that fair value gap lower, potentially. All right, nice. Well, this candle, let me use the replay tool again. This candle right there seems like it's respecting that, right? So the next candle, what can it reach for? Well, we are creating this swing low, which is the next discount array with the previous day low as well, that we can reach for. So once we reach for that, ideally what you want to see is a next fair value gap being created lower of that previous fair value gap, because that indicates that we are actually creating new order flow lower. So then after that, we are doing this. We are now respecting that swing low. And more importantly as well, we are not creating a new fair value gap lower, not creating bearish order flow overall, which then leads us through candle science, through understanding of order flow, to new context. Because now we understand that this low at that moment in time is protected, and this high right there is now weak. So we switch it. The unusual context is again here in play, where we can now look for our usual context right here. On the 4 hour, do we have something to work with on the 4 hour? No, not really. So let's look at the 1 hour. On the 1 hour, do we have something to work with? No, not really. And then eventually, we do have 1 hour fair value gap right there, overlapping with the breaker right there, to create that usual context again, to then target higher towards that high, that weak high right there. So reading the fair value gaps on the daily time frame through candle signs, through order flow right there, led us to understanding that that monthly fair value gap is going to get disrespected very early on, with the monthly fair value gap, with the monthly candle still being created at that moment in time. And then eventually that unusual context overall, because now we're disrespecting that monthly fair value gap, turns into usual context as well on this daily time frame right there, where we can continue higher off of that right there. And again, we can see the same thing. Once we create this daily fair value gap, how can we know the price wants to trade into the daily fair value gap? By the third candle right there not closing above the previous candle's high. So the second candle right there not closing above that high right there. Perfect. Now we have an easy path to trade into that daily fair value gap. And we do that. We do just that. We continue higher off of that, coming into the daily fair value gap, but also respecting this high. Depending on where we came into first right here, this is where, again, I'm ending the video almost with a more advanced understanding, because I'm trying to already ingrain that belief in you, ingrain the next steps into you. As long as you understand the general rule of thumbs right here for candle signs, then the mission is completed. You understand candle signs right there, and we can build onto that. But I'm already trying to see you how we can use these for our mentorship. So right here, if we understand where it came into first, so if it first came into the daily Verwijk gap right there, and is then respecting the previous day high right there with that swing high, so respecting again that wick right there, which is on the lower time frame, on the 50-minute at that moment in time, it's what? It's this. It's those fair value gaps lower. It's that sharp turn lower right there. And we could already tell that by just the daily time frame right there. So now we understand the next candle will trade into either first the previous day low or the previous day high right there. Which one does it want to trade into first? To understand that, we need to know the order of whichever premium or discount array came into first. So we first came into the daily Verwijk gap, which means we first came into a discount array. We then touched that premium array right there and we respected that. So the next thing price wants to do is again seek a discount array in the previous day low right there to then potentially continue higher off of there. So all I did right there was seeing the general rule of thumb, respect, wick right there. We're wicking both sides. All right, then which side did we came into first? Because if it was the premium array and then we had the discount array in the form of that daily Verwijk gap, then that previous day low would not have gotten swept again. We would have already continued higher right there towards the previous day low, previous day high right there. Sorry, previous day high right there, because that is the next premium array. So at that moment in time, it's just counting which one we came into first. First the daily, all right, first the discount, then the premium, then we will reach for this discount array again first right there, because price is seeking a discount, because we're moving from the premium array to the discount array, from discount array to the premium array, and constantly doing that. So then afterwards, we are continuing higher off of that. And now we are closing above it right there, closing above these highs. Means that we are disrespecting it. So now we can again expect higher prices overall right there. Which at that moment in time, we are coming off of this order block right there. That order block, it seems like we are respecting it right there. Meaning the next few candles are just likely continuing higher towards these highs right there. Perfect. So then we also understand that on the 4 hour, if we can find usual context, we can continue higher off of that. On the 4 hour, we can see that we have this fair value gap higher. Are we respecting that right there? Yes. So we are continuing higher overall. And we can also see, if we take a look at the exact opposite, we are disrespecting premium arrays right there. Because look at this candle. Is it respecting right there, or is it disrespecting that bearish fair value gap? It's disrespecting it. So right there, we can expect the next candle to just expand higher. Then after that, we have this discount array right there. That if we are wicking that, we are again respecting that. After that, we create new fair value gaps right there, which we are respecting. So we can again expect higher prices. We are respecting that 4 hour fair value gap right there. After that, we do not create a new 4 hour fair value gap higher off that. So the overall lag, if we do not create a new fair value gap higher off that, is weak. So this right there, that low, is a discount rate that we can potentially look for higher prices off of. So you're not using the 4 hour fair value gap right there. No, you're using the discount array in the form that swing low. It's a fresh discount array. We are respecting that because we are wicking it again. That wick is again on the lower time frame, fair value gaps higher. Then afterwards, we have this 4 hour fair value gap, which we can continue higher from. And right there, what do we see? We are first coming into that. We are sweeping that previous 4 hour candle low right there. And we are overall respecting again the order block with the fair value gap through understanding the wicks right there and continuing higher off of that. Which is very powerful right now, because now you understand already where the next higher time frame candles might want to trade towards. For understanding the confirmation of this 4-hour value gap right there, would you have gone only looking at the 4-hour and waiting for that respect to then get involved? No, because what we mentioned as well, and if you fully understand it, then you also understand right there that the respect right there on the 4-hour is just lower time frame fair value gaps higher. It's displacement higher on the lower time frame. That's exactly what we are looking at right there. So it is all about reading what the next candle wants to do on every single time frame constantly. And that is also what we are going to touch on more and more and more with this ID. That is very important. So if you can understand this, then again, you understand and you are very far in your understanding already. And if you do not understand this, then you are also very far in your understanding already. Because if you just understand the very general rule of thumb of respecting and disrespecting, then you have come a long way this video. And that is all that I need you to fully understand right now. The general rule of thumb of respecting and disrespecting. And then we'll add on to that ID later on as well. All right, perfect. Thank you. Please make case studies on this. Please study this before we move on to the next video. Perfect. Thank you.